Welcome back to Midcap Radar. Well, RBI is set to release new draft rules for gold loans. The RBI governor has since clarified that he did not indicate tighter norms, helping spook stocks of gold loan lenders recover. The central bank is also opening up co-lending to all regulated entities and for all kinds of loans. To discuss more on this, we are now joined by Shweta Daptardar, Vice President of Diversified Financials at Elara Securities. Thank you so much, Shweta, for joining us. First up, we have to talk about the gold loan segment. What do you make of the comments? Have you done any sensitivity analysis of what could be the likely comments, especially if there is any tweaking as far as LTV norms are concerned? And what kind of impact do you see on gold loan lenders?
Yeah, hello, good afternoon. So we have analyzed the impact of the implications of RBI guidelines. But the good part is, like you also rightly mentioned, RBI has clarified that they would be just maintaining rationalization of the norms, and there is no tightening that we can be expecting. So point number one, something which RBI had bigger concerns about is the LTVs, the on-book LTVs and the exit LTVs exceeding the origination LTVs, leading to higher over-indebtedness at the borrower level. So I think, but if you go by the norms, it has always been 75% LTV for all regulated entities. But due to definitely the underlying price value inflation, the exit LTVs continue to remain on the higher side. So I think we are expecting largely RBI giving a clarification on the same. But if you look at the stocks per se, so there have been regulatory lapses by the end of few entities. However, the market leader, the topmost player in the space, that is Muthoot Finance, and we also pulled out the con call transcripts which clearly highlighted, because we were unable to reach to the management. So Muthoot time and again has clearly highlighted that they have been largely in adherence with most of the norms. And given the fact that stock, despite being pretty sacrosanct, has seen correction today, and in fact it also recovered in the second half. But having said that, we continue to maintain a positive stance on the market leader and definitely would look at the guidelines whenever the comprehension comes through.
Shweta, good afternoon. Thank you for joining in. What may be tightening to the street may not be tightening for the RBI governor, right? That line of tightening may be subjective, but depending on where the draft guidelines come in, right? But if at all there are some kind of draft guidelines that go against these gold financiers, who do you think among the three of them is most at risk? Because Muthoot has the highest gold loan AUM, almost all of its book is on gold loans. So who is the most at risk here?
Yeah, so like I already mentioned, Muthoot largely in our assessment is much more in line or aligning its practices in line with regulatory requirements. Manappuram Finance and IIFL Finance, which are other two key players in the space. So Manappuram has almost 50% of its book on the gold lending side, whereas IIFL is around 21 odd percent. So these are the other two key players in the space. And time and again, we have already seen certain regulatory hurdles encompassing the business impediments for both of these names. So definitely, whenever the guidelines would come through, we would sort of articulate for all the players, but we believe it more so might impact the other two key names.
Okay. Shweta, let's move on from gold loan financiers and we'll await what are the exact draft regulations that do come about. We also want to talk to you about NBFCs at large. Are you a little surprised at the kind of sell-off that NBFCs have seen today, given the fact that the rate cut is generally seen quite positively, especially in the near term for NBFCs? Secondly, your view as far as expansion of co-lending agreements are concerned between NBFC and banks. Do you see that as a material positive? And lastly, if you do have a view on the likelihood that there could be an increase as far as the 1 lakh or 2 lakh rupee limit is concerned between customers as well as merchants, your view?
Yes, so answering to your first question, NBFCs definitely surprisingly saw a correction today. But we have to also understand the fact that in anticipation of rate cuts, most of the movement have already happened as far as the entire NBFC pack is concerned. We certainly believe more than rate cuts, what would drive the credit offtake or whether what would push the credit offtake for NBFCs has more to do with the liquidity scenario, how the liquidity scenario unfolds, and the boost which RBI is offering time and again on that front. So we also put out in our preview note, which we released recently, that the spreads between the corporate bond yields as well as the 10-year GSEC yields have been narrowing, putting forth a very favorable environment, a very favorable funding environment for NBFCs. So I think that is something which we are closely tracking. Your second question it was in terms of gold lending norms. So like I said, while
The co-lending
it's
norms,
very
yes.
clear
Yeah.
now that the comprehensive nature of the gold lending norms would be more to do with rationalization and harmonization than any changes in particular. We certainly believe most of the anomalies now would be corrected as far as both banks and NBFCs are concerned. We still maintain our positive stance on the entire gold lending space. As far as the third question is concerned, so in terms of the increase in limit, see, I think where the RBI concerns are emanating from is more to do with the fintech-led arrangements as far as the co-lending arrangements are concerned. So time and
Right.
again, a larger part of fintech loans have happened through unsecured personal loans, which have grown at almost 50 to 60% rate year-on-year basis in past 1.5, 2 years. So
Right.
to
Shweta, if I
curb
could
the
just
systemic
interrupt.
risk, which
Right.
largely emanates from this particular channel, I think that's where the concern is coming from the RBI front.
Shweta, do you have a view on the development at HUDCO that's come about today? I understand you do have coverage on HUDCO. Have you had a chance to look at the development? And very quickly, if you could give us the implications.
Yes, so it's a very positive implication for HUDCO in terms of net interest margins getting positively boosted now with this arrangement. But it's a long way to go. But the good part is HUDCO has now joined the bandwagon of PFC, REC, who are amongst very few companies who are now eligible to raise money at as low as anywhere between 4.5%, 5.5% interest rates through this inclusion of 54 EC bonds. But we have to also acknowledge the fact that this process is slightly long drawn. So by the end of FY26, you might not see a
Right.
very strong implication on margins due to this arrangement, but definitely going forward, FY27, slowly and gradually,
Right.
as the 54 EC quantum increases for HUDCO, more and more positives to flow in terms of margins.
All right, Shweta, thank you so much for sparing time and joining us today on this conversation on a whole host of subjects with regards to the announcements made in the RBI policy as well as the developments on HUDCO. Take a short break. More on the markets on the other side. Stay tuned.